Hello, everybody. Today, we're going to start talking about negotiating issues related to trading services. And in particular, we're going to try to understand what are the different challenges in services liberalization in the context of the WTO or also in free trade agreements. At this point, we have been covering everything that is related um, with trading goods, right? We talk about the GATT, we talk about the SPS agreement, we talk about the TBT agreement. So we're basically covering all the most important aspects of the different disciplines that apply to trade in services in the context of international trade law. So let's now analyze why trading services is so different from trading goods. It is important to remember, I'm going to start writing here so you can also take notes. It is important to remember that services complement trade in goods. And in your different activities during the course, in your consultancy activity, and also in the different examples that we have been using along the course, we can see how, for instance, trying to import or an export or trying to export a certain product will require for us to think about services, right? So, for instance, if we're thinking about exporting, let's say, lamps, right? We're trying to export certain lamps to the United States. We need to think about how we're going to pay, to be paid. Right? How we're going to be paid. So are we going to accept bank transfers? We're going to receive or to accept payments by means of credit cards. So definitely we need to think about financial or banking services. Also, we want to be sure that nothing is going to happen to our product when or during the course of the shipping process. So insurance is another aspect that we're going to consider, of course. And this is something that if you're not already familiar with, you will be very familiar with and in the course of international contracts, because when selling goods abroad or purchasing goods abroad, you need to identify what is going to be the so-called Incoterm. So insurance is one of those aspects that depends of the Incoterms that is going to be negotiated by the parties in the contract. So insurance, transport is something that depends of the Incoterm of the sales contract. But the point here, not for you to get distracted with the Incoterm issue, is that when trying to export, and the same will apply for trying to import these products, we need to think about how we're going to receive payments, and do we need to rely on wire transfers or banking transfers? And that's something that would definitely affect these transactions, right? The same with insurance, the same with transport, and so on. So this is just for you to think that about the inherent connection between the, the trading services, trading goods, and the connection with trade in goods, right? So we definitely depend on services to facilitate trade in goods. So let me just share with you my presentation, continue with my presentation. So when we talk about trading services, especially in the context of the WTO, we definitely need to refer to the General Agreement on Trading Services, also known as the GATS. And at this point, we are familiar with all the processes of multilateral trade agreements. You know how these agreements were negotiated, when they were negotiated, and the GATS is not an exception. We know at this point that the GATT is the result of multilateral trade negotiations, especially those who took place in the context of the Uruguay round, in the context also of 1995. The GATS was negotiated with the view of achieving a progressive level of liberalization in services. So this is going to be very important for us to remember. Remember that different from GATT, in which we can see, a massive change towards the tarification, the elimination of import bans. We said that in the Uruguay round, we can see that a vast majority of tariffs were substantially reduced, if not eliminated. It is believed that around 70% of existing tariffs were substantially reduced. The GATS was perhaps a more modest attempt to liberalize or towards liberalization, because here the countries decide that they were willing to liberalize trading services, but as we're going to see, countries are still pending of trying to liberalize or going deeper into the liberalization of trading services. This is going to be explained by different factors, and we're going to see this when analyzing different schedule of commitments and different attempts to service liberalization. Different sectors, service sectors, have been traditionally under the government's control or subject to monopoly. So depending on the country that we're talking about, we can imagine that education or even health services are very regulated and are subject to the control of the state. At this point, I want you to think again, just remembering what I just said about, how services complement trading goods. Just continue thinking about what kind of services are key in order to facilitate the trade of goods and merchandise. So that's a question that I want you to keep thinking about. We're going to see, and at this point, I think we are very familiar with the importance of domestic regulations. Remember that domestic regulations in trading goods are something that we analyze in the context of Article 3 of the GATT. Remember that we spent quite a bit talking about the importance of domestic regulation in trade in goods. And this, let's say, this represent one particular feature, if not the most particular feature, of non-tariff barriers. Well, let me tell you that in the context of trading services, domestic regulations are the key. So here, we don't talk about tariffs. So it will be very costly or almost impossible to think about tariffs in services. And let me just give you an example. No tariffs in services. Imagine that somebody hired you, and we just had the experience of the consultancy activity. Imagine that the company that hired this consultancy and you were looking for certain non-tariff barriers, that will apply to the products of this particular company is going to pay you, right? They hire you for you to get this important information, this valuable legal information. They contact you from abroad, you deliver your, let's say, your brochure or your paper or your memoranda containing this valuable information. Let's imagine that you meet through Teams and you basically explain what you found. So you just supplied an important service that is a professional service, is a consultancy service. Imagine that this company we know is located in our example this year is located in Denmark. So how Denmark is going to be able to tax that particular service that you just supplied, right? So it is almost impossible to imagine Denmark implementing a tariff, right? Or restricting in a similar way to goods. I mean, any particular type of restrictions. But we're going to see that depending of the service that we're talking about and depending of the mode in which these services apply, we're going to see that countries, by means of domestic regulations, can restrict how a certain service is supplied or if it is supplied. So it is almost impossible or too costly to apply border measures. So remember that in our course about trading goods, we talk about at the border measures and within the border measures. So this is the typical case of within the border regulations. Okay, so according to prominent scholars such as Matsushita, Schonbaum, and Mabrotis, most of the trading services take place intra-territorially, and this is why restricting domestic regulations becomes an important aspect of trade liberalization. So we're going to see that when countries liberalize trading services in different areas, in different sectors, they will have to handle their own regulations. So this is about domestic regulations. This is not about tariff concession. This is about modifying you as a country, your own regulations, so the services coming from suppliers, or foreign suppliers, can easily enter in the country and then compete with the service that are supplied by domestic service suppliers. So here you can imagine that in the context of GATT's negotiators, those negotiators were essentially called to manage regulatory diversity. Imagine the amount of different regulations, depending on the country that we're talking about, that can affect the supply of a certain service. Also, remember that here we're talking about intangible elements, right? So it is very difficult. I mean, especially when we compare with trading goods, in which you can see, you can identify numbers, statistics. With services, a little bit more difficult to measure, the size of a certain service that has been supplied in certain markets. So dealing with diversity here and with the intangible aspect of services is of capital importance. So I'm going to end this initial video here, and we will continue with how services are negotiated. So we're going to have short capsules, and hopefully this will let you, let's say, grasp all the important elements in trade in goods.